Ladies and gentlemen of the crypto space, we're live on a Thursday, September 2nd at 12:08 p.m. Still a little bit off, but I figured I'd get some minutes on and tell you guys what I'm thinking about. New is tempting, and crypto old is still new. Sorry. So, you know, things are hot on Avalanche, things are hot on Phantom, things were hot on Polygon. Are they not hot? Is that it? Meaning, is that a new protocol comes out and, it's hot for a little bit and then it's not hot anymore? I mean, no one's looking at Ethereum and it's only Avalanche, Solana, Phantom, Polygon. Ethereum's run around at over 100 Gwei for I can't even remember how long at this point. I had 176 right about now on average. Ethereum's hot. The prices are ridiculous, meaning the price of Ethereum as well as gas costs. So old is hot. Old is still very hot in the crypto space. You don't have to necessarily just jump to the new protocols as being better or superior. You think it's cheaper and you're going to have more capital gains on the new protocol because you saw it before everyone else. I mean, sure. I mean, obviously, if you bought Joe at 2 cents and it ripped to like a buck 80, you bought 100 grand worth of Joe. Sure, you could have made out like a bandit, but that also entails he bought Joe when nobody was looking at it, before anyone even thought to look at Avalanche. And 2 cents, it was pretty volatile back then down at those prices. And 2 cents to 1 cent, that's a 50% loss in the blink of an eye. So it's a big risk to deploy capital to new protocols that are not time tested, mother approved with regard to security and, in many regards, price volatility. I mean, even the old protocols have a very volatile price action. Ren's been doing pretty good. That's good to see. We haven't talked about Ren a lot on the stream, but we used to. Oh, well, we used to. That's back up to 85 cents, I think. Woo! That's nice to see. There are 6 cent entries back in March. I know a lot of you boys were back in it, back in around the chaos net days. Let's get into the stream. We got a nice party going on. 17 people in the stream. Let's hit the comments. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social good. Stop depositing on exchanges, not your keys, not your crypto. Non-custodial, DeFi, or nothing at all. Bam, let's pop it over to the main screen and see who's in the stream. Nick's in the house. We can do better. Hope you're back to 100%. As you could hear, probably at about like 40% right about now. Ready to go lie down on the damn couch. I hope we can take a deep dive in my favorite pizza shop, Xboo. I like the Xboo. I, I'm not throwing around big dollars at it. I do the opposite. If I'm like, oh, Xboo's awesome, I will throw less than than I typically would. So let's take a look here. So Phantom and Avalanche are obviously very hot right about now. So if you go over to the Phantom chart on multifarm.fi, Spooky is right at the top, 167 mil. It's clearly the front runner. People talking about Spirit, but Spooky's got a great user interface. It's just really really nice. It reminds me of Joe and exactly why Joe ripped the head of Pangolin. So front runners, network effect, they tend to remain in front, and it's very rare that someone disrupts it. Someone disrupts an ongoing disruption. So it's nice to see TVL is creeping up on Phantom. Let's take a look at Avax real quick. I mean, Trader Joe is obviously bigly in the lead. So what do you do with Expo? There's nothing to do with these assets. I talk so often about time horizon, and I deployed. I'm not sitting there thinking about it. I'm not sitting there looking at it. Maybe I'll look at price appreciation. Maybe there's a different place to deploy Expo, which is exactly what happened yesterday with the FTM Phantom Foundation deploying their incentives, and Spooky Swap gave it to Expo stakers, so you're able to redirect your Expo from Scream to earning WFTM, which is cranking out 21%. I threw about 10 grand into Expo. So this is cranking out like $4 or $5 a day. I'm not going to complain. I'm not going to scale in necessarily, albeit it's tempting because this is a revenue generator. And this is the top end of where the transaction volume will be on Phantom, which means those transaction fees are going to be captured by Expo very nicely. And I think the incentives last for, how long did they last for? Oh, I don't have my MetaMask connected, but I think it's a month or two, which is nice. Anyway, these incentives are just additional. 38% capturing transaction fees on a platform that's potentially going to go through asymmetrical growth over the coming years. Winner, winner, chicken dinner. I mean, if you're going to compare like Spooky Swap to Convex, and this really goes into the title of the stream, I don't dismiss old. In fact, I rather old. The vast majority of the portfolio is still allocated to the convex position, CVX, CRV. Let's take a look at Avalanche real quick. I mean, Joe's hot too. Very volatile. Let's take a look at the price chart. We don't have a price chart for Boo. I wish we did, but on ChartX we're able to see Joe very obviously. Let's pull it up. It's so volatile. I can't deploy capital to extremely volatile assets. Look at that. Nice rip up. Damn, look at these wicks. Ripped to 240. That's crazy volatility. But look at this nice wick down. So it's nice. This is an accumulation wick. And then people obviously that bought really low are like, all right, there you go. They dipped out. They took their profits. But this is really cool too. So it dipped down. It was excessive dip down and people bought. This means they think that this price region is good. So they were looking for that big rip down and they accumulated. So it looks like this is going to be range bound for a period of time, which kind of makes sense. I mean, if you take an average price, this looks like a nice foundation right about here, considering this price action, considering this previous resistance, which never really broke out, never really found support, and it broke down. So this is a heck of a congestion zone of price action. This is not something that I'm really like with a lot of emotion and anxiety to want to deploy additional capital. Like I'm tempted. Um, let's switch over to Avalanche. I want to see what my balance looks like. So just like with Spooky Swap, I oh no, not gotta go over to Avalanche. All right, so I ordered a new computer, folks. It's gonna be less laggy. I get it in middle of September, like September 20th to the 23rd. Wrong network. No, right network. Refresh. 2 seconds, guys. So Joe, you stake Joe into XJoe. 31.92%. Obviously, I have no XJoe balance here because XJoe you can farm. So they obviously incentivize the XJoe farm position. Sin. Okay. So I have, that caught my eye. This is Nerve Finance rebranded the Synapse protocol. That's interesting. This has caught my eye. Cross-chain bridge, you're able to provide liquidity. This is also like a hop protocol type opportunity. Tempting. You know, yield on stablecoins, facilitating cross-chain transactions. The complexity is compared to the old Frax Finance catches my eye. So 219 Gwei. I can't claim anything on Frax. You're talking $400 or $500 of claim fees. But I got like I think fair. I don't have Ethereum selected, but this thing's cranking out yield. Oh, very nice. So I got 3x yield on 25%. It's like 70% on stablecoins. So I'm earning like 70 something percent on 47 grand. I'm sure as hell not complaining, and I'm sure as hell not going to want to necessarily deploy to a newer protocol. I mean, Nerve rebranding the Synapse is not totally new. It's been around for a bit, but this is time not time tested. There's still uncertainties involved with fracs, but the yield is denominated in a deflationary asset. That's extraordinary. So in my eyes, like Synapse and Hop compared to Frax and Frax USDC incentivized liquidity, this is what catches my eye. And what's interesting is this is old as compared to like Synapse and and Hop Protocol, or even Joe or Spooky Swap. But I'm tempted to, and I was tempted enough to deploy about 10 grand or so to Joe, which is now worth 13 grand, which is very nice. So if you put 100 grand in there, it's worth 130 grand. So I deployed 10 grand, it's worth 13 grand. I'll check back in a couple of years. 55%. That's crazy. You're earning 30% on transaction fees on buybacks from the platform, and another 55% in incentives. That's pretty awesome. So while Spooky and Joe really catch my eye as something that's cool and new and exciting, the price volatility I don't necessarily like. Can you make a fortune off price volatility? Sure. I mean, if you were in literally just at the beginning of the month, a week and a half ago, 2 weeks ago, you went 10, 15, 20x on your money. 2 cents, 2 cents, I mean, 20x on your money. Wow. That's a lot. That's big gains. Look at that big red volume bar. It's a big liquidation right there. It's only on the 1 hour though. Let me hit some comments and I'll keep on rambling. Um, Chris, good morning. Nick playing hurt today. Yeah, don't feel good. Charlie, a pleasure. Breakless Rider, morning Noah. Chris did a bunch of research on XBOO. This is looking very strong. Rug Doc shows it low risk. That's true. I saw that as well. Tokenomics seem amazing. Well, yes, as I mentioned thus far on the stream, Expo is a nice clawback, a buyback mechanism where platform transaction fees are used to buy back Boo from the open market. So it's a constant buy pressure, a disinflationary pressure of sorts, which is ultimately price appreciative. So I like Spooky Swap. I like Joe. Um, I don't buy these types of assets really thinking about liquidation. I sized my position where I don't have to think about it much. I'll let this go. I'll give it a couple years. I'm not going to liquidate something over 13 grand. Obviously, if you have 100 grand and you deploy $1,000, you deploy $500, maybe you deploy 5 grand, and you're feeling kind of spicy today. And, but you got to size your positions appropriately for a very rational and reasonable time horizon. This is the type of position size that I'm going to give a nice time horizon to. This is not 2017. The capital, if there's if we have these cycles that still remain and Bitcoin retraces, I'm kind of leaning towards a super cycle at this point. I think it's very different. There's literally no reason for the capital to exit the crypto space. We're talking about literally 2017 and 18, or 18 when things really took the dive. There was no reason to keep your capital in the crypto space. It was you sold Bitcoin, you had dollars. You sold an asset, you had dollars. What the hell are you going to do with your dollars in a depreciative market? You had your dollars in a centralized exchange. You took your dollars out and you went back to the stock market, or you took your cash to your bank account. But now there's no reason to take your capital out of the crypto space. These are functional financial markets that have liquidity, that have monetary velocity. These yields, you're getting these yields whether it's a bull or a bear market. Everything is different. And that's what I'm going to hang my hat on. And I know a lot of folks, older, old school folks. Um, Secrets of Crypto is a big one on Twitter. He's old school from 2013. And he's talking about riding the cycle to the top at the end of the year and liquidating. I have no intention of liquidating anything. My Bitcoin position is relatively small. because I expect Bitcoin to significantly outperform over the next 10 years. So it's like one and a quarter Bitcoin I'm holding on to. And Ethereum, I expect to outperform over the next 10 years. So I have a decent Ethereum position size. But the vast majority of my portfolio is yield bearing assets. I don't mind if Ethereum or Bitcoin dip down in a bear market, they dip down 50%. Woo! Legacy finance gets all like, whoa, that the market corrects 50%. 60%, 70%, 80%. The assets still are what they are. Price volatility doesn't scare me. I know where they'll be in about 5 to 10 years. And the beauty of it is these volatile assets may behave accordingly 50, 60, 70, 80% drawdowns. But the beauty is they're generating revenue the entire time. If you have extreme volatility to the downside and you've deployed capital to the protocols that capture transaction fees. You're capturing transaction fees whether the market's going down or going up. Different game now, in my opinion. And I'm going to proceed accordingly. Spooky has that great bridge. That's right, Chris. Way finally checked out Taiki's channel because of you. I like Taiki very much. I look forward to speaking with him and Messi again. Those boys are good peoples, and they've gotten to where they've gotten, having traversed lots of experiences, and that's meaningful. All experience counts. Wave, hope I'm doing well. I feel like shit. Larry, no, if you've ever developed a smart contract platform, I sell my house to get in. Yeah, I've been dabbling, and I could develop. I could write smart contracts. I have work and I have jobs. That's not what I'm doing right now. I would like to, but that would be a very big career shift, and could very well be the case in a couple of years. I could probably get a job as a smart contract developer. So I could write that stuff. I've been coding for a better part of my life. Professional, professionally coding Android since 2009. Um, Chris set up MetaMask for Phantom, Bridge USDC to Spooky Swap. Paid about $7 in fees. Yeah, it's good numbers. Decent bridging cost. Even with Ethereum gas at ridiculous numbers. It's nice. It's nice to get over on another chain. We played Polygon when Polygon was getting hot, and it was pennies for a transaction. Frankly, Avalanche and Phantom are quite expensive compared to Polygon transactions. So I appreciate the cheaper transactions, but you want to pay for the network that's going to give you the most return with a decent time horizon. And that network's going to be Ethereum. I know it's going to be a couple $100 a transaction fee, but those are the protocols where the big money is going to be deployed. I mean, Avalanche and Phantom, sure, there's big money being deployed there, but those are the people that are in crypto that, they're the tend to be younger, not necessarily more degenerate, but they're not they're not the venture capital necessarily. They're not in industry. They're not corporate entities. And that's the big money. That's the trillions and trillions and trillions of dollars that will eventually cycle and funnel its way into Ethereum L1. And for those parties, those market actors that have an appetite for increased risk, they'll go to the more volatile markets, which are potentially on other L2s or maybe newer protocols on Ethereum L1. You're welcome, Nick. Expo's interesting. Breakless, any recommendations for learning technical analysis? Um, yeah, three things. Price action, resistance, and support. Moving averages. 50 SMA, 100 SMA, 200 SMA, 200 EMA. Those are my favorites. And then so price action, support and resistance, moving average, support and resistance, and trends. Sim triangles, ascending triangles, descending triangles, rising wedges, descending wedges. If you get all that down, you replay this stream. If you get that, what I just said down, you're off to a good start doing technical analysis. And don't look at 1 hour charts. You're going to burn your brain. You're going to end up buying and selling and over trading. Look at 4 hour maybe if you want granularity, but look at the daily and look at the weekly to understand the trends. But bear in mind, you're going to be doing technical analysis, and you can follow people like JT on Twitter, and you're going to get better. You're going to get more veteran, experienced technical analysis. So as much as I even know how to do technical analysis, shit, I just look at the good technical analysis on Twitter and call it a day. I don't have time to do that shit anymore. Patrick, ever could consider moving ETH holdings to MIM and taking your stablecoin? So tempting. I'm quite in the loop with what's going on at Abracadabra. Love what I see. I have a decent spell position. Those were a couple of my 10K deploys. I just threw it in. No, I'm not currently tempted. I'm extremely risk considerate, risk adverse, and my Ethereum is best suited for my risk profile being deployed currently on Aave. The gas fees are killing me, so I don't have as much debt as I would like. I would probably have more debt at this point, but it's so damn expensive to interact with any of the Ethereum L1 protocols, even Aave, that I'm not taking on debt. But that's kind of okay. I kind of got my hands tied. Not that I want them to be tied, and I just don't want to incur the capital expense, the gas cost to interact. And I'm very comfortable with my position, so I don't mind having less debt necessarily. I don't mind not being deployed to some opportunities that I want to be, and that's a good thing. I'm being restrained. I'm being prudent and not making as much capital gains as I can ultimately is satisfying for myself because I know that it's the hard thing to do, and it's the hard thing that makes usually the best results in the long term. Yeah, those XBoot docs, man. Check out the XBoot docs. XJoe, I think there's a burn component, but I'd have to look at the smart contracts because I don't see it in the documentation. What's going on there? So those types of things help me uh, resist temptation because it's just not developed as much as I'd like. I mean, look, you got Confex that just rolled out governance, and I'm going to play around with that because I obviously I build a Convex CVX position on a rolling basis from yield, but look, you got these new locks and vote weight, so that this is awesome. Um, Definitely going to play around with this. Um, my main position for a reason. Captain's in the house. Hey, man. Hope you're doing okay. I love me some NRV and his rebrand. Yeah, so that's cool. So Synapse and Hop catch my fancy because you're dealing with stablecoins and you're dealing with just capitalizing on transaction fees with people that are going cross train with their capital. Albeit, as I said, to me, I see opportunity costs as compared to Frax, and just the yield is in a deflationary asset. That's just tantalizing. So I'm just looking forward to accumulating more and more FXS. Um, Chris, Nick, been reading through them. Thanks. You're welcome. Documentation. Um, Captain, 100K, X sushi potential, 2,300 a month for the 2.5% traction. So, okay. So X sushi is obviously very much on my radar. I just don't have the capital to deploy to grab a quarter mil worth of X sushi. Maybe one day, depending on the appreciation of the other assets in the portfolio. What's your thoughts on the FRAC proposal? Burner increase FXS yield from returns on idle collateral. I gotta take a look at governance. I've been meaning to. I just have a lot of work to do. Burn. I would say burn. Burn, 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 burn. Deflation is going to cause appreciation of FXS over time, and that's what we want to see. Should we wait to reinvest profits right now? Considering the price of gas, I ain't doing shit. I'm not doing anything at 222 Gwei. Be $500 a transaction right about now. Right now, getting off this. I'm going to work. Hey, Noah, what's your? Oh, I moved it. Hey, Noah, what would you consider the ETH equivalent of Yak on AVAX? The Ether. Well, Yak is on Avalanche. Was the ETH equivalent? Oh, compounding. There is nothing as much as it's tempting because the price, the chart, everything about Yak looks price appreciative. I'm so not interested in auto compounders. I was tempted to take on a decent sized Yak position and get some nice capital gains. You get a 10x, 15. There's nothing wrong with 10x in capital gains. I'm just not going to take that risk. I don't have time. I want to sit back and get 50, 60% of my capital and go to work, and I save my money. I feel like I'm doing what my parents and grandparents would do. Put your money in your bank account, save your money, spend less than you make. So I'm very much on that train right about now. For what it's worth, 38 years old, I guess maybe I operate older than I am, but I'm more of a saver. I spend less than I make. Um, and I don't want to take the risk. Maybe it's because I don't need to. And I've been fortunate enough with capital gains to be able to be in a position where I don't need to take the risk, and I can't deny that that is likely the case. Sums in the house. Any opportunities you're exploring on the Arbitrum? Yeah, Arbitrum's kicking off. There's nothing at the moment. It's going to be everything. Look, I can't wait for Arbitrum. Aave Arbitrum, I'm going to bridge everything over. I mean, there you go. If I could operate, and then frankly, I'm the second Aave deploys on Avalanche. Isn't Aave's going to? Oh my God, brain brain freeze. Aave and Curve are going to Avalanche. Curve is already on Phantom. It's quite tempting when it's not at the Polygon right about now, but probably one of my next moves may be to get my Ethereum off of main chain onto something where I could actually do something with the debt. So I think Avalanche might be the target when Aave deploys. Um, that's the deal. Albeit, depending on how fast Arbitrum rolls out across protocols, maybe I'll just keep it on L1 and just deploy to Arbitrum L2. Has the same function or the same interactivity as everything we've been doing for the last year, give or take, starting with Polygon. You bridge it over, you deposit to Arbitrum, but you're still operating on these protocols like Aave and Curve, and that'll be nice. Be nice to get away from these gas fees for. I haven't done it in a while since the Polygon days. I got a little taste with Phantom and Avalanche, but hasn't been with any significant amount of collateralizable assets. Um, Hey Noah, I love your unique vision of crypto. What would be the best strategy to accumulate Curve with stables, avoiding the high gas fees? You get incentivized Curve on Polygon, I believe, still, and I think it's this incentivized Curve on Phantom as well. So it just, it's not big numbers, but it's definitely solid percentages. So you save your capital, and it grows, and it compounds, and you get Curve, and it doesn't have to be on Ethereum. So you operate on Polygon. And I know it's frustrating to say that it may take years to grow your capital, but back in the 60s, you had to save for years for retirement. You had to work for decades for a pension. And we're so used to easy money nowadays that we forget where we came from. And we don't have to have instant money. We don't have to get rich quick. And even myself, I'm not taking the risk. I don't mind waiting 5, 10 years to watch my capital grow into something where I don't really have to do work anymore and I could do what I want. I could just write contracts all day long. Smart contracts, that is. Dylan, what's up? What's up? PM, great content. Thank you for talking to us like we are adults. It's refreshing. It's a pleasure. Well, I can do BitBoy and say, it's going to the moon. Get in now. You're going to miss out. Not going to make it. Stop making me do funny shit. I don't feel good, guys. I guess I do talk to you guys like you're adults. Someone's got to do it. Someone's got to provide solid financial advice and tell you guys to take less risk, spend less than you make, focus on interest and revenue streams. Because that's what a dividend investor would do in the stock market. And just because we're in the crypto space doesn't mean we can't operate like rational adults. Save our money, grow our money. Everyone wants free instant money, and that turns out to be a lot of risk. A lot of people have lost a lot of money on these assets that have gone vertical. You know how many people lost fortunes on Doge? You know how many people made fortunes? Probably more people lost money than made money, even though that thing went up bigger than Bitcoin over the last 7 years. Because you got it. attack these markets rationally. And the second you start just throwing capital around, not doing what the fuck you're doing with no decent time horizons, no decent position sizes, or no decent analysis of a particular monetary policy, you're taking excessive risk and you're going to fuck shit up. You got one shot at this. You got one shot at this. You take your time before you deploy capital, so you don't make mistakes. CVX locketing went live. That's right, Peter. Oh yeah. Is Frax on any other chains other than Ethereum? Yeah, I believe so. Yeah, it's on here. If you go over here to the overview page, Frax is on. Is that Harmony? By the way, Frax is incentivized paired with MUSD on Polygon, which is awesome, to the tune of 89%. And MUSD is hot. So, MTA, but MUSD does what it does. It's not a lucrative position. It's just a risk mitigated stable coin. So a Frax MUSD position is an awesome pairing that's getting 89% on the money. Huh. Why the hell have I not deployed to that? I am not involved with the Terra ecosystem, but I look forward to the bridges. So bear in mind, I got this up as well. Yep. Harmony Cosmos bridge. I want to see more interoperability with Cosmos and Polkadot. It's the China narrative. Cosmos and Polkadot hit the China narrative because of the BSN. So does Ethereum. And as the more bridges evolve, you got this whole ecosystem. At some point in time in the future, you're not going to know what fucking chain you're operating on. I like to see this, and Harmony's been off the radar as well. No interest in deploying to it at this time, and I don't have any interest in the Harmony asset. But I want protocols. I want opportunities. I look forward to Cardano eventually releasing smart contracts in the next 1,000 years so I can deploy capital. That's the name of the game. Ken, have a good day, bro. Yeah, thank you. Thank you. PM, any thoughts on iKava? I don't know what iKava is, but if you're talking about Kava, that's cool. Kava's cool. I have a little position. Daniel, any books you recommend to adopt your mindset and learn? Yeah, realvision.com and follow the macro people. Follow the macro people. Start with Raul. PM, I heard Moon or C pancakes. Well, bear in mind. So I hear BSC I run. I hear Moon I run. So here's the deal with pancakes. Not pancake swap, but the memes. Like, look, I've used to be very resistant to memes, hesitant, but I look past the memes nowadays. And if I see something that's hot, I'll attack it. Like Spooky Swap, that's great. And that's got a great meme, too. Abracadabra, it's a great meme. And if you look through it to see what the protocol does functionally, that's meaningful. So peer through the madness, and that's what's important. Where can I put my IrisNet for good APY? Osmosis. 280% yield on Iris Osmo pool, on the Iris Osmo pool. I don't know why it's not loading, but that's what it is. This is a heck of a protocol thus far, but bear in mind you got osmosis.zone, but you also got emeris.com. And this is basically, these are the AMMs, and DeFi is starting to spin up for Cosmos hubs. That's it. You're making yield on your Iris, significant yield. You might as well just stake it also. Do a validator and contribute to the security of the network. So Iris, I've got a decent position at this point. Mark, we all gonna make it, my man. Joe, Phantom pumping, get in. I'm already in. It's all good. I'm gonna capture those transaction fees. PM, I lost everything in June. I blame myself. Started gambling on Pancake. Stay off BSC. I don't trust that shit. Pancake. I'm sorry you lost everything, and just to be rational. And I'm here, and I will always talk, and I'm going to try and do my office hours as best as I can, and I'm here to help keep you guys heads on straight, take less risk, save your money, spend less than you make, compound your yield, get revenue streams, generate a salary, and don't do things like everyone else does it. Nick, well, what coins should we be looking at in the Cosmos network? Follow all of them really. It's the China narrative because IrisNet's integrated with the BSN, and IrisNet is a Cosmos hub. It means it's interoperable with every other Cosmos hub, which means everything in Cosmos really fits into the China narrative. And it's the same thing with Polkadot, really. And as the bridges develop with Ethereum, it's really the whole ecosystem is completely interoperable with the China narrative, which is the digital yuan narrative, which is basically the entire country of China is supportive and pushing blockchain forward. And if you look at the US, that's doing absolutely nothing other than regulation and rules. Oh, China's pushing forward and deploying shit to the whole country. Interesting, huh? For us finance, it's an L2. It's useless. It's useless. Captain Jesus Christ fell out of my chair with the ADA comment. No, it's all good. I don't hate. I don't hate ADA. Let them roll out smart contracts. I wouldn't. I don't buy protocol assets. The only protocol asset I really own is Ethereum and Atom and Polkadot, and but I don't own any real Avax or Phantom or Matic anymore. I don't own any ADA. I don't have any interest in it. But let them roll out their smart contracts and let's get those protocols going. Spin up those bridges and let's deploy some capital. Let's get some yield. It's all good. Isn't that an interesting, rational take? Different. Think different. I know. I know. I could make a lot of people fall out of their chair. Frank Kusama, do you think it's a better deal than Dot? No, it's their canary network. It's all good. It's speculative, just like Dot, and I've just been sitting on Dot. I bought Dot pre the 100-to-1 reverse split, so I up a lot in that regard. And it just compounds. I think I get like $15 a day off my Dot staking. Yay! Thoughts on QNT? Very nice. I like QNT. I don't have a position. Is Osmo inflationary? Very, very inflationary. All the hubs are inflationary. With inflationary assets, you have to be careful because the only way inflationary assets appreciate is if adoption is greater than the inflation rate. So, frankly, Osmo has been significantly appreciating. It depreciated and now it's back up to about $4, which is nice to see. But as soon as adoption does not keep up with inflation, the inflation causes extreme debasement and depreciation. When are your office hours? I don't have fixed office hours, but check out my Twitter profile and you can subscribe. And when I press the enable button, it sends out an email that I'm online. I wish I could be online more. I might make some significant changes in my work and really what I do with my life because I really would like to do more office hours and help people. Kill us. Thank you. I appreciate it. Dan, you laughing my ass off. Thank you. I was this close to going into Frost. Love your channel. I don't want to waste my time. It's highly inflationary. All it is an incentivized supply disruption mechanism with a trivial monetary policy that has no deflationary pressures. You can make a fortune with it, or you can lose frickin' everything. And between the two of them, I don't give a shit about making a fortune with it because I have no interest in being exposed to losing a lot of money. So I wouldn't touch it for even. I wouldn't touch it. Asian narrative is huge. People, I think, are sleeping on Icon. There you go. So let's get those Oh, that's nice. I've had an Icon position for a long time. I haven't even looked at it in a long time. Pretty sure, and I really hope I transferred my icon to my ledger, which I think I did. How will regulation affect CVX CRV? Curve is regulation proof. The DAO is completely decentralized. There is IPFS portals to interact with the smart contracts. There's no technological way to apply regulation to the Curve contracts nor the Curve portal, which is hosted by IPFS. There is no domain to seize. There is no server to seize. It is effectively, it has effectively reached critical mass decentralization. Daniel, do you think Osmo is too high right now? I wouldn't buy any of it. I got a fat Osmo airdrop. They literally just give it to you, or gave it to you. Um, the airdrop. They literally just gave it to you when f- airdrop for Atom holders. There's a lot of airdrops for Atom holders. Atom is on fire, by the way, which is Cosmos. It's expensive right about now, guys, and it's hard to get an entry. I mean, the captain knows. The captain knows. We're at $24 for Cosmos, Captain. Woo! That's nice. I have my entry at $2, so it's hard to say to get an entry at 24. It's hard, guys. I don't have any easy answers for entries. Um, more lobby. Hey man, saw you on Taiki's stream. You seem super knowledgeable. Here to learn. A pleasure. You're welcome here all the time. Ask anything that's on your mind, and I'm happy to help. I don't know anything about helium mining, my friend. Is Osmo yield generating with tax transaction fees? No. Osmo is an inflationary Cosmos hub that is a monetary policy strapped on to their Cosmos hub AMM, their DEX. It's a secondary Cosmos hub, whereas Amaris is built onto Atom and Root Cosmos, I believe. I think that's the implementation. And the big criticism of Amaris compared to Osmos is that Osmos built it onto a separate Cosmos hub to strap on their monetary policy so they could throw around ridiculous incentives, which does make sense because you need incentives to really drive liquidity into an AMM, which has been working out very well for them thus far. Sup, hey Noah, I feel a bit exhausted chasing all the new hot chains. Stop chasing shit. You don't need to chase anything. And that is exactly the sentiment, the feeling that I want people to avoid. It is exhausting trying to move around capital, trying to get the best opportunity possible. And what's going to happen is you're going to have slippage and permanent loss, and you're going to end up burning a lot of capital over trading. Trade less. You think any of them really have a shot of winning a piece of the game? They all do, which is why I deploy capital to XJO and deploy capital to Expo. I don't see any temptation right about now to deploy any additional capital. I'm interested in what Arbitrum's going to do. I'm looking forward to get my collateralizable assets off of Aave on Ethereum L1 and get it onto something where I could extract the equity from those assets and throw around some stable coins to capitalize on some additional yield. If I could get 50% on an extra 100 grand, an extra 50 grand a year, I'm not complaining. Thoughts on SIF chain? Not to my knowledge at this point. Speaking on entries, where the Solana stabilize at? Unknown. That thing has been going up, 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 and up. What are the airdrops for Adam? Shit, I'd have to look back at my Twitter shares. But if you search on Twitter, Cosmos airdrops, Adam airdrops, there's like 10 things thrown around airdrops for Adam right about now. Where do you stake DOT? So historically, I used, what is it, the JS, Polkadot? Polkadot.js.org, but nowadays I just do it direct in Ledger Live. Nice and easy. Is Sushi the best multi-channel DeFi platform right now? Yes, but it's not necessarily the most lucrative X asset, X Sushi. It has deployed on 12 chains. Something may click there. Yes, it's very powerful. But if I'm going to do transactions, I'm tempted still to use 1inch. 1inch is an aggregator. You want to use aggregators because aggregators give you the best swap transaction, least slippage. That's the deal. All right, let me wrap it up. 60 people in the stream, 32 likes. We can do better. Thursday, September 2nd, 12:52 p.m. As always, I thank everyone for joining. Tell everyone to subscribe after hours on the Discord. I wish everyone a wonderful day, and I will see you again tomorrow, hopefully feeling better. Catch you then. Peace.